this. All right. It looks like it kind of is, but I don't see the video coming through. X. I don't know why the video is not coming through on X. I think the people on YouTube see it. I don't see the people though. The people on X. All right, hold on. Let me see what's going on here. Actually, no, does not appear so. Let me restart the stream on. One. And let me cancel this one here. This one seems like it's not working. How do I? X is having issues. The broadcast has not started yet. No, it has. Look, I'm right here. I'm on YouTube. I promise you. And I actually see it here. X, but I don't know how to end the stream.
In the comment section, can you hear me loud and clear? And then we'll get started very soon. Welcome to, it says cohort number 18. Amazing. Some of you are repeat offenders. You're back again. But good to see you guys. The guys that are coming back, I see Rich over there. Rich has been a few times, but welcome everyone. Good to have you guys all here. We'll get started in a bit. We're just getting everyone in, and then we'll get going. All right, let me get the screen share up and running. Righty. Okay, guys, I hope everyone's having a good day. I know I think it's a holiday in two parts of the world. I think it's the US and the UK. So, yeah, maybe we'll have more people because they don't have to be at work today. Okay, can you guys just check the mods? A lot of people's mics are on. All right, UK is working. Cycle's different. Okay, you say not a holiday in the UK. I think it's a holiday in the US. All right, guys, let's get started. I think most of the people in, if you guys can just check your mics that they're off, because there were a few people that's mics are on, and we can pretty much get straight into it. So some of you...
Okay, Zane, GM, can you hear me?
Maybe
this is finally working
Dex,
here.
we can run a poll over here and just quickly ask...
I know you can't see anything
have you
just
completed
yet,
a Wales School workshop or the course before? Yes.
Yo, Star, what up? How's it going? Let me get
the
video here. I'm gonna have to get it to the
poll,
window.
just vote. I just love to know how many people
through
are
Zoom,
here that have
so
been here before,
I don't have
and
that
how many are
live.
here for the first
Is
time.
your first workshop? Yes,
it's
our
your
first
first workshop. Specific to Wales School,
is.
right? Don't worry about the other workshops. I mean, specific to Wales School. Have you attended Wales School
here
before,
like this.
or is this your first time? So let's quickly get those votes in, and then we'll get started, just so I know
window
who
capture.
I'm talking to over here, to keep it a little bit different and not too repetitive. Okay, it's quite a lot of you are here for the very first time. 40% so far. Second workshop for about 21%, but you all need to put your votes in, and then about another 40% of you have attended, at least 2 workshops or more than that. All right. Okay, I think usually the polls don't change too much from that point, but you guys can continue to vote. So, look, because there's about 40% that are brand new, for those of you that have
this
come
is not
2-3
what I'm
times,
seeing. I'm trying to get it to
we have to
show
cover the majority of the things for them, because
the
they won't
Zoom
know
meeting,
this
but
is,
that
they
didn't
are
seem
the majority.
to work.
41% of them It's their first time ever. So, guys, we're going to go through everything that you would have covered in the course, just a little bit more extensively and practically.
I'm just trying to share my screen for the Zoom meeting here.
Conditions that we're in. That's what we always try and do, is we try and take the lessons and then show you, hey, this is how these things will work for where we're at right now in the market cycle. So if that sounds good, let me know in the comments if that sounds good.
Okay, that looks like it's
Mark
working.
has been 7 times. So I hope
Let's
that
see,
you are improving and learning, and you take something new home each and every single time. Some of you say the 5th time.
We just want to look at the
cool. Let's get into it. First and foremost, risk management. When I first started with trading, I found it to be very difficult to find any information on risk management. I kept searching and looking for things like typing in on YouTube.
I'm going to get to the chat here in a second, guys.
Nobody really gave it to me on a silver platter.
I want to focus on...
And today I want to give it to you on a silver platter. It's pretty easy.
I was going to say just the content, but
can be used synonymously.
It's kind of cool to be able to see Kyle while he's talking.
Sizing. So it's about calculating how much risk you can take at any given point in time. And the only way that you can do that is calculate your position size, which is how much is going to be allocated into an investment or trade or whatever it may be. Now, of course, position sizing is going to work differently depending on whether you're trading leverage, spot, bots, whether you have a long-term holding strategy in something like Bitcoin or property, because this is obviously vast. It goes across anywhere that you're going to be putting your money. You want to consider and weigh up the potential risks, right? So we'll get into risk management in quite a bit of detail. We'll then look at support and resistance, because I always say that not all levels of support and resistance are built equally. I'll just give you the spoiler alert. I believe horizontals are the most important form of support and resistance.
We know that.
And you'll see
horizontal
why,
are the most
as
important.
we get to that section.
For a lot of reasons. Sorry, guys. Thank you for bearing with me.
Candlesticks, every trade that you take or exit will mostly be based around the anatomy of a candlestick and what that candlestick looks like. And then we'll also talk a little bit about chart patterns, ranges, and trends in some of the future sessions, moving average strategies, market cycle theory. Does the 4-year cycle still exist? How does it tie in with the larger time frame cycles like the real estate cycle, the commodity cycle? We'll dive into that. And then portfolio structuring based on where you're at within a bull run or within the overall crypto cycle or real estate cycle. How should you have your portfolio structured? That's diving into whether it should be diverse, meaning a broad portfolio of a lot of stuff, or very concentrated. There's certain points in times that it makes sense to be diverse, and then other points in times where you don't want to be diverse at all. Instead, you want to be very concentrated, so you can cut
I just want to put him somewhere where it makes some sense.
And then we'll talk about liquidity and volatility. So is the market about to expand, or is it contracting and reaccumulating
I think
for another
that
move?
about does it. All right.
Where market
Jeez, it's always fun. All right.
To and from, and then
okay, can you guys hear me? TEDx that by Adam. What up, you guys?
But there's ways that you can alleviate some of the risk or reduce the risk. So first we look at risk management. You must always remember that. And then in the end,
we're live here. Okay, it's official. It's official. We've done it.
Trade with risk
Kyle's definitely cooking right now. Dude, he's just diving right into it. Holy cow, dude. I'm going to let him cook.
We'll talk about that, right?
See if we can pop the chat out here.
The poll results are in. It was 40% of you first workshop, 24% second workshop, and 36% of you have done a couple of them. Okay, amazing. So, all right.
Dude, you guys are the goats. Adam, PT003, TEDx.
The course. It seems like it comes up straight away, but I think
let's see if we can get the chat
user
window.
ID side. So just tag some of the mocks.
This is where I wish someone was doing this.
Consider each of you have $10,000, right?
We make this happen.
Each of you have $10,000, and you're entering into the market of Wheel of
we're
Fortune.
gonna get to play games.
You can pretty much double your money or
Zane,
lose all of
TEDx,
it, right?
man.
So you have $10,000 imaginary money, and right now, based on today's price action, which way are you going? Long or short? So in your own mind, ask yourself which way you're going, long or short. This is an all-in trade, right? I'm going long. Let's go long. Everyone seems to like long. So there it is. Liquidated, zeroed, right? I'm zeroed out. If you went short,
we got liquidated.
Well, you have double your money. So ask yourself again, are you going long or short? If you went short again, you also got liquidated. Point is that you can keep winning, but eventually you guarantee to lose. So even if you have one of the best strategies in the entire world, which let's say, for example, I'm going to give you the realistic and then the unrealistic. Realistically, some of the best trading strategies in the world will provide you with about a 65% win rate.
Hey, that's what we
over
said.
time.
We're trying to get to a
Let's even go with an
65% win rate.
unrealistic model and say that you win 99% of every single trade you ever take, which means you take 10,000 trades, you win, 990 or 9,999 of the 10,000 trades, but you're going all in on every single trade. That one trade that is going to lose within that data set of 10,000 will send you to zero.
All right,
this
we're
is
good.
the purpose of risk management. This is why you want to.
This is the screen that I'm seeing, you guys.
management.
Okay.
So risk management is basically
him
understanding
cook.
how much you should allocate into a position based on what your strategy is and based on what your win rate is, which means that you're going to have to figure out what your win rate is. So when it comes to trading, now I don't want to talk over people's heads because some people may be new here, but the way that it works in trading is generally you look at a whole bunch of different information and you just take trades on what feels good and right. Okay, so you like look at the market and you say, this feels right that I should go long here and I should buy here and I put a stop loss over here. As you progress as a trader, later and later on, you'll eventually start to utilize trading styles and strategies that work, where they've been back tested and you have a data set to say that this strategy, let me give you a very simple strategy. Let's say you're waiting for the 9 and the 18 exponential moving average on a daily time frame to cross above each other, right? 9 crosses above the 18 and the angled up. That becomes a long signal and it's bullish. When it crosses down, you exit into a cash position. Now, this can be used to create a trading strategy. And there's many different ways that you can do this. You can look at, for example, extensions away from the mean. You can look at standard deviation. So if you have an average or the mean and price extends 3 standard deviations above, you sell. If it's 3 standard deviations below, you buy. This is how people build trading strategies. So as you progress as a trader, you're going to start to learn trading strategies, and then you're going to try and figure out your risk management based on what the win rate is, because you've studied the strategies and the data, and you know that the win rate is 50%, 55%, 60%, etc.
This makes a lot of sense, you guys. I'm gonna
succeed even with a very bad win rate, right? So we'll get into.
I'm gonna try to comment as well, but I don't want to talk over him because he's spitting facts, you guys. This is one of the biggest things. This is the first course that we did, right?
And
turn him down a little bit. This is the first course that we did, right? This risk management, where if you lose, how much you have to gain in order to recover those losses. This was something that people don't really quite understand, right? Check this out. If your portfolio goes down 50%, it has to go up 100% just to break even. And that's something that people really don't get. So when you're trading, risk management is like number 1, 2, and 3 in being a winning trader. And he said it as well. If he's saying something super important, I'll fire him back up. But what he said was, even if you have a win rate of 99%, if you're going all in every single time, you're eventually going to get wrecked and your bankroll will go to zero.
Loss required or the percentage gain that you need to recover that percentage loss. So red is the loss, green is the gain that you're going to need to get back the loss, just to get back to break even. In our minds, we seem to be really bad at math. We're quick at math, but bad at math. So in the mind, people are like, well, I lost 50%, so I need 50% to get back to break even, right? That's obviously not how it works. If you lose half your money, you now need a 100% profitable trade to get back to break even. A 50% trade will only make you back about 35% of the money. So look at this slider over here as it goes down, right? You lose 5%, you only need 5.3. You lose 10, you need 11.1. You lose 15, you now need 17.6. And then this is where it starts to accelerate and become more and more difficult. You lose 25%, you now need 33.3%.
TEDx says, I don't want to be broke again. That is all of us. We do not want to be broke. We want to help each other make it and keep it. That's the biggest thing. Who cares if you have $5 million if you lose it on a single trade? Shout out to James Wynn.
Anything above 55%, look at how big the gains are. So 80%, you now need a 4x. You need 400%, and you haven't even made profit. Imagine hitting a 400% trade, and you made no money. You literally just at break even. You lose 95%. You need 1,900% to get back to break even. So what happens to traders in all sorts of markets, not only crypto, is something called full trader tilt, right? Going full tilt means that they start to experience these losses and they start to double down and triple down like a gambler in a casino to try and win back the money. They take riskier and riskier bets and they just find themselves in a deeper and deeper hole. The biggest and best example that I've seen firsthand.
Yo, what up, Crypto the Kid? How's it going?
James Wynn, right? James Wynn,
Oh,
who definitely did not
did he
win.
just say James Wynn?
The guy that was the hyperliquid whale who had $100 million and he sent it to zero in just a couple of weeks. Literally $100 million to zero in a few weeks. That was somebody that experienced full tilt within trading, right? So you want to be really, really, really careful of this.
Tony, peace,
and
love,
if you
and
have
prosperity.
a systematic approach, and
thanks for reposting it, everyone.
Calculate your position.
Dude, I totally, I have it on video. I said James Wynn first.
This can't happen, right? It's
Kyle.
pretty much impossible for something like that.
He's watching the
happen.
stream.
So just giving you a different visual, because the right-hand bars just show you how exponential it gets. Like,
yeah, this is insanity.
Relative to the left-hand side. This is the ideal area where you want to stop those stop losses.
This is where, again, I'm going to kind of bring him in and out a little bit here, because I'll kind of explain a little bit of what's going on. When you have a project that's going down 80% and they're like diamond hand, diamond hand, diamond hand, you have to hit a 400% just to get your money back. So when they're saying diamond hand, there's an opportunity cost, a severe opportunity cost to holding those projects. But bigger than that is it really hits your bankroll from a risk management perspective. That's the most important thing that he's saying here.
Anyway,
he's saying it a few different ways, but I'm really hammering that home because if you don't have good risk management, you can't win.
You have to scale into position slowly, and that's why you can't go all in ever on any trade, right? You need to be, pretty calculated about how you're entering into
I love
the
these charts, by the way.
Let's just use this as an example, just very, very, very quickly for one example. Let's say, for example, you want to enter into a spot trade, but you don't want to take on too much risk. One way that you can do it is you can monitor those higher highs and high lows, right? Higher highs and high lows. And then instead of going 100%
That's my game.
long,
should I bust out paint? We need to draw together.
Maybe you just put in 5 or 10%, right? Price
Oh,
goes
don't
up
worry,
a little bit,
TEDx. We're breaking it all down. We're going to be streaming more consistently
too. Put in another
too.
5 to 10%. Then put in another 5 to 10%. 3 high lows, you're already 30% long, right? As opposed to just banging 100% in on the first time that you think that the market is.
All right, so right now he's saying you don't all in, right? You very slowly start DCAing in on these horizontal supports. I think that's what he's going to be talking about here a little bit. That is true. Massive difference between playing spot and playing leverage, long-term trades, short-term trades.
It's really important that you understand as well that most traders fail at this.
Wag me, TEDx. That's right.
The good news is that if you come up with some strategies, it can become pretty systematic, and you can probably even automate that process because it's based on rules, right? And if it's based on rules and you can automate the process, all you have to do is calculate how much you're going to be putting into that portfolio or that strategy.
Hey, so it's way more important to have a strategy, like a repeatable strategy, right, than winning any singular trade. Because if you have a strategy that's a winning strategy, I keep changing his camera, by the way, because people keep moving around on my screen. How do I pin it? Like, I just want to pin him. I don't care about any of these other people. No offense. But that's very important to have a repeatable strategy so that you can make money and take the emotions out of that trading. And you can bake all these factors into it, all this risk management into it, so that you can make money. This is a cool thing that he's about to talk about, by the way, which is how, because winning and losing, it doesn't really matter. Your win rate could be 2%, but if every time you've won in the 2%, you're up 50,000%, it doesn't matter, right? So you're going to see what your win rate has to be. That's what the left side here of his chart is. This is the win to loss ratio, like the actual size of the win to loss. Versus the percentage.
3 times more than you lose, right? Or than you risk. So if you're risking $1, you would win $3, which means that you don't have to be right all the time.
I'll simplify this. If you're getting 3-to-1 on your money, you only have to be right 25% of the time. You always just add 1, if that makes sense. So if you're getting 2-to-1 on your money, you have to be right 33% of the time. If you're getting 3-to-1, you have to be right 25% of the time. If you're getting 4-to-1, 20%. 5-to-1, you have to be right 6-to-1, so 16% of the time. That's how that works. So if you know what your win to reward magnitude is, how much you're actually going to win, just throw 1 on it, and that's what you need to win. So if you're getting 3-to-1 on your money, you just need 4-to-1.
You want to be a good loser,
25%.
And you want to win 25%
of the time to break even.
And it's literally part of the game. It's not possible to trade and be somebody that can't take a loss. If you're going to have a terrible time, it's not going to work for you. You're going to lose all your money. You're going to become depressed. You need to get comfortable with losing and accept that it's part of the numbers game, right? It just is what it is. So realistically, most of you following the completion of the course and learning a little bit about technical analysis and market structure and the way things work should easily be able to find yourself winning 60% or more of the trades that you take. Now, another thing is don't overtrade. If you overtrade, ultimately this number is going to change. 4 trades is going to change this number, which is why I also say goal setting in trading is not really a good thing. In other businesses like sales, you can be like, I'll set a sales target of $100,000 or $1 million or whatever the number may be. But
this is facts.
When it comes to trading, I don't really believe in setting targets like saying, oh, I'm going to trade my way to $1 million or $10,000 or $1,000 or whatever the number is for you, because you're going to force trades and that's going to shift these probabilities. You need to take what the market will give you. And by doing that, you need to find a strategy and a system. So I recommend that for most of you, when you start off with your trading, what happens is most people want to risk so little for such big wins, right? They're really focused even further down this line over here. They're looking at like 10 to 1. So they're risking $1 in hopes of getting $10. I think most of you should spend your time around this 2 to 1 to 3 to 1 region, which would look, in between this one and this one. This one in the middle, just cut it out. Don't look for that kind of stuff. You have to be deadly accurate. You have to have a very, very, very sharp eye for technical analysis. And you have to have a lot of experience in the market to be able to get these 12 to 1s. What I've found is that most traders anyway end up moving back. It's like this full cycle, right? They first start off with like a 2 to 1, 3 to 1. Then they get clever and they think that they're looking for 12 to 1s because they're so good. And then they realize that they're losing all the time. And then they come back and they start to look for even 1.5 to 3.
I'm gonna mute for just 1 second on the screen, because what he said there is also super important. Imagine if you're a DJ in the trenches, and what he just said is you're not looking for these 12 to 1s. That's a 12x, right? You're looking for like the 3x, the 2x, the 3x. That's what you're looking for. So when I say take profits, that's exactly what I mean. You don't have to hit these 10x, 100x, 500x, and don't ever let people make you feel bad because you took profits, because this is from Kyle, who's saying you just want to live in this 3 to 1 neighborhood. 3 to 1 is massive. You don't need to hit these 12 to 1s.
You're going to be much better off looking for 2 to 1 to 3 to 1 risk to reward ratios. Okay, so let's say you find a trade setup and there it is.
Take those
it's
profits.
A 3 to 1 and you want to actually take this trade. Now let's talk about how that looks and how the position sizing will work to execute on this trade. So I know it's a bit blurry, but I'm going to give you a real example in a moment. If we look over here and it says over there in brackets 1.91% in the red. Okay, that's how far price would move away from your entry to stop you out. So price would have to move almost 2% and you'd be incorrect on the trade. And if price moved down 5.83% or hit your final take profit. So we'll have a look at some real life examples. Let me just quickly look on my second screen over here quickly to grab one of these trades. And the trade I'm going to give is, since the market is coming down slightly, we're going to work on a bearish example. It's something I covered on YouTube today, and that's Tron, which has been incredibly bullish. But also, when you learn about the liquidity lesson, you'll know that underneath all of these high lows is going to be a lot of liquidity, which means if you can eventually sweep that liquidity, you'll be looking at a massive drop. So because Bitcoin is showing a little bit of sketchy bullish price structure at the moment, let's just go with it and say, well, we'd be looking for a short trade because Tron has broken structure over here, right? You can see over here, he has your previous high low. You created a lower low, which means we're looking for price to run up over here into the original breakdown area. This is going to be an area of interest. And then we're going to be looking for a short trade. And we're going to target over here the 0.618
yeah, of course,
to
TEDx.
65.
This is, I'm like taking notes on the side right here.
Going to be also
yeah, we'll watch
this
back.
Pocket, which
we'll
is
watch this one back together.
Lines. So I'll label
so we'll watch
it
at our own speed. Maybe even the stream tomorrow we'll watch this again.
In a few weeks' time, right? Or a few days' time. So eventually we're first going to bounce up over here. You're going to hit 35.58, somewhere around there. And then the expectation is that good chance that you continue this trend towards the downside. So something like that. Okay. So you're going to target more or less towards where some of these previous lows are. There is going to be a little bit of support over here. That's why I like this area, this little cluster over here Let's just quickly throw in a box over there for you guys. This little cluster over here, I like that as the next area of support, which is where you want to take profit on a short trade. So we'll put in yellow, and then we can use our risk to reward tool to really work things out. And then I'm going to show you how you position size. I'm only going to go through this example once for the sake of time. And secondly, because we've done this example so many times on other coins that you can always just go back through the archives, which school will give you, and then you can go and watch those other videos. So your entry is between those two green markers, and we're trading this down to the bottom over here, and we want our stop loss floating.
Yeah, I think we're going to watch it
above
together.
Those highs. So if we zoom in and I double click on that, I can go to style, price labels, always show the stats, and we'll just brighten this up a little bit so you guys can see exactly.
He's on trading view right now. He's on trading view.
There we go.
If you don't have a trading view account, you should probably get one.
So price labels on, always show the stats.
Oh my
gives you all
God,
the
that's
information,
200.
and that's it. Right?
Now we're getting the real alpha right here. He showed us how to stylize our charts. Thank you. That is definitely what we need.
How far does price have to move away?
I love that.
To stop us out of the trade, telling us that our trade idea
is incorrect. The kid says, "Amen." When dudes will tell you to take profit and manage risk, but will spend 0 time telling you and 99% how, and 99% of the time
entry, which over here it says
saying,
4.72,
"Here's my thesis."
Is the way
I don't know
that
if I can even read this, but that's pretty good.
That is the starting number, right? So entry.
If you guys want to read Crypto the Kid's thesis, it's right there on the screen.
So 4.72. This is how it works. We go to this tool called Better Trader. So
remember
Better
in the
Trader.
Beginning,
we
know all about that.
Magically, that is magic dust. You have another 10.
Hey, don't forget, we have some giveaways going this week too. You guys have been cooking in the giveaways because I kind of just give the giveaways to people who are in the stream all the time. I feel like everyone has won who's been in here, except for TEDx. I don't know, TEDx, have you won a giveaway yet? Maybe you should win a Rizzo giveaway. I don't know. We got the Rizzo giveaway coming on today, actually. The Rizzo giveaway comes today, and then we're going to do a Billy giveaway as well. $250 each, right? I think.
Okay, so we put in $10,000. Let's just say my leverage trading account is $10,000. So I'll write $10,000.
Zane, you haven't won yet either?
How far away is the stop loss? So all of you in your own mind, how far away is the stop loss? It's written over there.
You can also,
of course, use
guys.
your ruler.
If you haven't won yet,
and
just
you
let
can
me know.
measure it out.
I'm
the stop
literally
loss
taking
is
notes here.
4.72% away.
Zane,
so you're going to go 4.72. That's it. That's all that you have to do. The risk level.
PT003's won like 7 times.
Do you want to take on the trade?
He's going to retire on the giveaways.
Now, at any given point in time, I said I would, like, ideally, this is the range, right? 5%
I got you guys. Hold on.
is what you want to risk at any given point in time. So you have a couple of options over here. Let's say there's a couple of other trades.
777. Are you a XQC fan?
Trades. You know, you want to open
Adam,
this
you haven't
trade,
won yet?
and then you want to take 4 other trades as well. You can only risk 5% at any given point in time. Then you have to risk 1%. So 5 trades, 1% equals 5% worth of trades open. If all 5 trades simultaneously got wiped out, you lose 5% of your account. Not ideal. Mostly you're going to start off even less at like 2%. But I'm going to give you the example at 5% because that's what our little slide over here shows. So therefore, we might want to open 4 more trades. So you're allowed to risk 1%. So again, then you go your risk percentage level. Of this total account, we risk 1%.
I just took your guys' names down, all of you. I'll find a way to navigate you all to victories here over the next week or 2, and we'll see how much money we can give out.
We can go 5x.
I do like this Better Trader
5x. It doesn't matter. The numbers are going to be the same. I'll show you in a bit. Let's go a low leverage trade, which is realistically what I would do is 3x. So if I click this, it should say your max loss is $100 because 1% of 10,000 equals 100, and there it is.
So basically, we'll run this back, but what you're going to see here is he's just essentially trying to calculate what these red and green boxes are. Because again, there's 2 things. People always talk about how much have you made or what your win rate is. It's actually both, right? It's an expectation, an expected value formula. And when you do an expected value formula, it's not just how much you win when you win, but the percentage of the time that you win. You have to take both of those into account, and that's what he's doing right now. He's trying to understand what's my likelihood of winning, and what is the magnitude of those wins or losses when I do win or lose.
$106 as collateral. So
what up, 1111? How's it going?
6 times 3
Isco, hold up, I'll put you down.
$2,118. So your total position size, therefore, is $2,118. So you go short with $2,118. And if you're wrong on the trade, you're only going to lose $100, which is 1%. Okay. So
hey, basically for the giveaways, they're random-ish, right? But if you guys are in the stream supporting hardcore and on the comment section, like when I make posts, I see people now commenting on every post, even if it's just like, yo, what up, Soka? That's like super helpful for the algorithm. So if you guys are doing that, man, I try to hook everybody up.
And you fixed it at $100. No matter what, you should not ever lose more than $100 on this trade. So let's say, for example, we want to take this trade because you want to flex your P&L card on the exchange to all of your friends. So you want to put a 30x leverage trade.
Hey, that's why I take trades.
Cool, right? When
I want to flex my card.
It goes in your favor.
My wins.
The percentage card is going to be huge, right? You're going to look like a genius, and you want that. You want to go and share this to your friends and family on social media. So now focus on the bottom two numbers. Number 2 and number 3 will not change. The only thing that will change,
I think that we learned in the lesson that this doesn't change
because you're using 30x leverage, which means this number will drastically decrease. And we say 30x leverage, same trade setup, calculate. There it is. Now you only need to put in $70.62. You
just need to put in less money, but you'll get stopped out more quickly.
$70.62. Right? You're risking
that 4.72.
That doesn't work.
This is important, right? This 4.72% stop loss, right? It just gets hit much faster. So instead of having to make an actual 472 move to the downside on 30x leverage, oh, he's shorting. Sorry, I didn't see that. So instead of making a 4.7% move to the upside, it only has to move 472 over 30, right? If it moves to like this middle part here, like right here, you'll get liquidated earlier.
Around here, before
I think that's what he's saying right here.
And
I just broke it down differently, but
well,
I think
only
that's
the
what
amount you put in, which if you're an isolated margin, you'd only lose that $70. So when you look at this, you generally want your total your leverage to account for what the max loss is. So you need your required margin to be equal to your max loss or more. And the reason why is otherwise you're not going to even be able to hit your stop loss. So 30x is not going to work. Let's try 20x. That works. 20x leverage means you have to put in $105. Your liquidation price on the $105 is basically the same as your stop loss. So you'll be liquidated at the same price, essentially. Okay. I hope that makes sense. If it doesn't make sense, the team will be around. You can ask them questions on this. Write down your questions. Write down your notes. The team at the end is going to help you out. All right. Let's get into the best traders of all time.
I'm going to move chat here so that we can.
Earth over here because,
actually, we can bring it back up.
You know,
I just got to size it down just a little bit.
I probably think like that, you know, you're not doing so good because you see the things on Twitter and YouTube where people are making
these are the best traders of all time
and 40,000% and all this rubbish.
Just a little bit so you
this is the reality. Legendary traders and their annual returns. You all know Warren Buffett. A lot of you know George Jones. He's still around. Ray Dalio.
So he's going over the greatest traders of all time. Warren Buffett, George Soros, Paul Jones, Ray Dalio. Dude, he needs Nancy Pelosi on here. Nancy Pelosi's the GOAT. Absolute GOAT.
George Soros, 30%. Paul Tudor Jones, 15 to 20%. The point is that you know, Bitcoin provides massive returns by just holding spot without even trying to leverage trade. And these are realistic expectations. If you're doing these numbers, you're within the best of the best of the best, right? So don't beat yourself up is what I'm saying. If you find yourself that maybe even at a loss right now and you're like, wait a minute, it's a bull market, but I'm actually down. This is typical. This happens in the beginning. When
all the time,
when you're a new trader, this is what happens. And that's why you want to calculate.
You're going to make mistakes, right?
Okay.
When you're new.
What about breakdown of trading styles? As I told you, the less you trade, realistically, the more money that you're going to make. Most people think that they want to be a high frequency trader. They're going to make a whole lot of money, but the success rate of day traders is very, very low. 10 to 15% of day traders succeed, which is very close to crypto traders. 10 to 20% of crypto traders succeed. But what about long-term investors? You see, you can still use everything that I'm teaching you, especially when we get to this section in market cycle theory, to understand how to buy and hold early in the bull run and distribute or exit late in the bull run and keep the bulk of the move or the meat of the move, right? That is 60% of long-term investors or hodlers succeed. And then swing traders, about 20 to 30% of them succeed. I am a swing trader, right? That's what I predominantly focus on, which means I might take a couple of big trades within an overall bull cycle. And you can do the same thing too. Based on what I've covered in Whale School, this is everything that got me to where I am now, pretty much on a silver platter for you guys. So just go through all the material. It's all there. But anyway, going back to forming the guaranteed winning structure, which is going to be 60%, is being a long-term holder. Well, what if I told you that you can actually outperform these guys with Bitcoin and with a very easy strategy? I'm sure that most of you would be interested in doing that. So if you want to get better than 20, 30% returns year on year, this is all you have to do. And it's going to be very dependent on, will Bitcoin continue to garner a network effect and to succeed over time? Of course, that's vitally important. But it's a very easy strategy that requires nothing more than consistency and discipline. And it's been written about in this article at length. And I'm just going to show you the numbers, right? So if we go down over here, basically this guy did a study, done this study for many, many, many years. And he's looked at what it looks like to dollar cost average $500 into Bitcoin per month consistently over time.
Yeah, Tony, hit me with your question. Sorry, I was just getting out another tweet to show people how they could sign up for these courses and stuff like that. But let me know if you have a question for sure. I was talking to the crypto school team was actually DMing me because I'm talking to them right now. If you have questions also, I can jump up on stage and I can ask Kyle when it's a Q&A section. They said we can ask whatever we want. So just let me know.
On the 15th of each month. That's when he entered the
what's
the
going on here?
I got to see this. The market declined for 13 months and lost 50% in its equity. It returned
I'm going to drop you guys the link right now here.
In 19 months. And Bitcoin
this is going to be the way to sign up. You can go ahead and
once again
go to this tweet and you can follow the instructions. And if you have any questions, let me know. But it's super easy to sign up.
Worst possible time. $500 written down this column each month, 500, 1,015. And then this is the current USD value and the amount of Bitcoin bought. So as you can see over here, if we scroll further down, at this point he's contributed $12,000 and he has 11,738. Scroll a bit further down, he's contributed
all right,
now.
So this is, hey, I love Kyle because he's all about analytics and data, which is my language. But I know more than anyone that when you throw up these spreadsheets with a bunch of stuff on it, people just like their eyes glaze over. So I know how that happens, Kyle, dude. I get it.
So it averages everything out, and you can go through.
But essentially, what the punchline is here that he's talking about is really just kind of going through trading scenarios of if you would have invested in different things and like kind of what the drawdown, what the returns would be, opportunity costs, and stuff like that. I'll take a look at this article and I'll share some of it as well.
Guys. Even more so than a buy and hold strategy where you try and, pull the full trigger and load up everything in one go. This is going to be the best thing that most of you can do. And you can go and ask yourself, when you first got into Bitcoin, how much Bitcoin would you have now? Put in your start date, put in today's date, allocate an amount that you would have been comfortable allocating into the market at that point.
Well, that's 100% for sure.
And then say, are you allocaking monthly, weekly? And
the Bitcoin strategy with managed leverage, way more predictable than the trenches. One of the things that the trenches
or certain day of the week
have working against them, right, is the volume and liquidity. Like even if you win in a trade, it's hard to get money out of those trades sometimes.
If we click monthly over here, your return on investment would be 654%. And keep in mind, you always had exposure to Bitcoin. You never sold. You just bought and bought. You spent $9,300. You now have $70,000. That's from 2017, exact top of the cycle. The worst possible time. You bought it like $20,000 Bitcoin price and you pretty much rode that all the way through those bear markets. You'd be up almost 7x, 6.5x. Okay, so all of that is there for you. So let's talk about a little bit more about the TA side, right? I said not all levels of support and resistance.
Man, Kyle's prepped, dude. You guys can't see it on the screen right now, but he has 1,000 tabs open.
You're going to learn about
and he's just cooking going through them. And I know how hard it is to be talking. Is it really hard when we're both talking at the same time, by the way? I'll try to keep turning him down if I'm talking, but I also don't want to talk over him too much. But essentially, when you're trying to talk and manage a bunch of things at the same time, it is a massive pain. Screen size, zooming in, zooming out, looking at all the tabs. Oh my God, dude.
Fourth
difficult. I feel
test
you,
of a
Kyle.
trend line, it's probably going to break. The other important thing is, especially in downtrends,
he said by the fourth test of a trend line, it's probably going to break.
Usually going to
so it's tested 1, 2, 3.
Or months. depending on the time frame you're looking
trend
at.
line broke.
But many candles, a lot of candles still, even if you're on a 5-minute chart, many of the candles will still continue to range and reaccumulate and form a base. So this is not a great strategy to just buy the very second that
you feel me, TEDx. That's right.
You want to wait for that range to develop. You want to wait
What's up,
for a new
Rye?
uptrend
Is that Rye or
to
Ree?
develop. And therefore, personally, I found that horizontals
Hopefully I'm saying that
are
right,
the most
but
significant
appreciate
levels
you
when it
joining
comes
in.
to support and resistance. They're very sticky. They're strong psychological levels within the market, and they hold much higher weighting. So everything we like to order it as a priority, from highest priority.
Don't worry,
to
Chad is covering
priority.
up a little bit of the right
My
side of the
priority
screen here.
list
I
looks
think
something
actually
like
we
this.
will. Right now, he's got
Horizontals are
arrows
the
pointing
most
to this part.
significant
So I'm
and
trying
most
to,
important,
if there's important information on the right
irrespective
side of
the
that
time
screen,
frame. You need to
I
decide
try
what
my
time
very
frame is
best
right
to
for
remove
you.
chat.
So
But
typically, I'll analyze on the weekly chart. I'll find my areas of interest on the daily chart, and then I'll execute the trade on the 4-hour or hourly time frame. Okay, so again, I'll say it again. I look at the chart, map out the ideas of where things are probably going based on the weekly. Are we in a range or a trend? Then I look at the daily to pinpoint the area of interest where I want to take the trade on that particular day when price comes into that level. And then I'll physically execute the trade on the 1-hour or 4-hour time frame. So irrespective of the time frame, I'll always look to the horizontal levels first. Then I'll look to high time frame moving averages. 200 moving average 200 moving average is going to be very good on the daily, the weekly time frame. 21 exponential moving average on the weekly time frame as well. That helps you to identify, are you in a trend or are you just chopping about within a ranging market? Are you in a bull market?
remember that's an important piece, right? We know that from our candlestick and chart patterns. You need to have a chart pattern that confirms the trend, that goes with the trend, for it to be really explanatory and to be able to take an actual trade at those levels.
Remember, I've covered in the course as well the 21 weekly exponential moving average, and now I can give you a real life example because we're basically at that level right now. So a long signal is when the EMA is angled up and price is above it. Then you're in a bull market. It's short or an exit signal would be when the EMA is angled downwards and price is holding below it. At the time of when I did this, Bitcoin was probably only about, I think, like $25,000, somewhere around there when I made this slide. And if you adopted that buy and hold strategy using this with 100, you would have turned $100 into 17,276, right? And it looks like this.
Wait, what?
So
we would have made $17 million?
So I paired this up. I pair it up with the stop and reversal indicator called a lucid SAR. So those stop and reversal indicators popping on the screen over there, this gives you additional confirmation. And as you can see, if you watch my show in the last week or so, you've broken those. So if they pop towards the upside, they become resistant. If they're below, they act as support. So right now, you are still above that 21 EMA, but if you start to close multiple candles below, you have the stop and reversal indicators, which will begin to accelerate down, and you'll have that EMA beginning to turn over. Now, there's a time and a place where you have to take this more seriously, and a time and a place where you need to ignore this. So there have been a few times where I ignored it. If you have a look over here, and you go back to any of those videos, I knew that you broke these levels back here, but I ignored it. I knew that you broke these levels over here, but I ignored it. And part of the reason for that has got to do with when you come through to the market cycle section, it's about the timing.
We haven't gotten to the market cycles portion
yet. These Bitcoin cycles tend to repeat a lot of the time.
We will probably this week,
though. About 1,000 days, you want to start getting really careful, which is where we're at. So if you do
Tony, man, thank you so much. Says, not going to lie, I am glad to be part of the Sophie Data community. I'm glad to be part of your community. I'm glad to be part of all of your guys' community. We're going to learn to trade. We're going to crack this nut. One of you is going to turn $100 into 17 million. So 16.9. We're okay with that.
I think that's important. So keep an eye out on that. On the 21 EMA, very useful, very easy for any of you to use. Again,
and if you guys have questions for Kyle, let me know, because I'll jump up and I'll ask him. We have a few, but I don't know that they work with what we've seen so far. Because we're talking more chart patterns. The notes that we took from our last session.
This week, it was still coming down. This candle,
Adam, go ahead, man. Make your 20 mil.
Felt like there's no way I'm buying a candle that just.
Adam said, "Forget 17. I'm making 20."
But in hindsight, look at that. You broke the stop and reversal. You reclaimed the 21 EMA. The 21 EMA started to angle towards the upside, and look at what happened next. Of course, full bull run, right?
Don't worry, Adam.
Huge
At the end of the cycle, 100K, that's
so
going to be
same
nothing.
thing applies for the downside.
I'll give it to you in a briefcase on our
You
yacht.
don't want to take it seriously, but when these things break, bear market. You can have a look at all the prior ones as well. When it breaks, bear market. When it's above, look at that. Face melting bull market. Okay, cool. Let's move on. So that's support and resistance. Now you're going to have to look at candlesticks as well and study these. Unfortunately, because
pin bar candlesticks, here we go.
Lesson
Here it
plans
comes.
in the school course short because people have the attention span of a goldfish. So I was told I have to make them 5 to 7 minutes long.
Yeah, that's true.
Unfortunately could not go into extreme detail when it comes to candlesticks, but candlesticks are very, very, very useful, guys. You need to go and do a bit more research on candlesticks. I don't know, maybe at some point I'll release like some articles or something, or put something on a website with like in-depth stuff on candlesticks. But the way they position next to each other also gives you a lot of information above and beyond what the wicks are showing you, right? So this is just the most simple thing ever, right? Bullish candlestick is going to be green. A bearish one is going to be red. Bullish means it goes up.
I know that he is sharing a lot of knowledge right here for free, which is beautiful.
Of it. You only have the you need to wait.
Don't worry, TEDx. You're gonna have your own briefcase. You're gonna have your own yacht.
Of the candlestick, but there's your
candlestick
pattern
is super
there's
important.
Your low price. Top of the green closes there. That's going to be the close, and then that's your high. The green or the red is known as the body, and the rest is known as the wick. Right? So very, very useful, and this is how you use it. Okay, so pin bar buy and sell signals. They're very, very, very useful. They give us a lot of information, more so about liquidity, which we'll talk about as well. I'm actually not even going to touch on it because I don't want to confuse you. But when we get to the liquidity section, I'll also show you how you can use those candlesticks to identify areas of liquidity where there's inefficiencies in the market. Markets like to remain efficient, right? So
anyway,
Nick
said pin bar is his favorite. It's mine too. Those pin bar candlesticks, man. We know all about those. So I have like notes right here on my desk.
Like let's say over here,
candlestick has the wick has to be more than 50% of the candlestick, and then you have to close in the top or bottom. The actual body of the candle has to close in the top or bottom 25%.
You have a high expectation that price will probably bounce.
We know all about those, dude. We are the pin bar candlestick goats.
Remember,
and we are the angle trading goats. We know all about coming in at an angle. We got our protractors. We do it.
A key level. So it doesn't matter that there's no time frame that's labeled over here. It's time is relative to the number of candlesticks that are printed on the chart. So as you can see over here, this spends a lot of time. This is many candlesticks. Obviously, this is not a live feed where I can use the ruler, but I'm just going to approximate. There's about 120, 130 candlesticks between this section and this section over here, which means that's a significant amount of time that's reinforced this level as an area of resistance. Now you can see, look at those wicks that are forming over there, right? Big, big, big wicks that are forming over there. Let's say you had a big high time frame moving average as well. It becomes really, really significant that you'll probably reverse the trend and continue towards the downside. Or if it's in support, that you'll reverse the trend and pump towards the upside. So these are one of the most powerful is these bullish pin bar, bearish pin bar candles. They're marked by a very small body and a very large wick. You have to think what happened to create this candle. So the candle would have opened over here where my little cursor is at the bottom of the green. And at one point in time, this candle was fully red and it looked terrible. At one point in time, it looked terrible. And then bears obviously were like, that's it, we out. And then bulls were like, we taking full control over here. And bulls ran that candle all the way back up and then just closed a little bit down, showing massive transition of momentum, right? At one point, the bears were, that's why you have to think if you can reverse time a little bit, this was fully red. It would have looked terrible. And then bulls fought back in a massive way. That tells you there's going to be a huge reversal when especially paired up with a key area of support. Okay. And then you have the same thing. The opposite is true over here. If it's looking like a huge green full-bodied candle, right? At one point in time, this is a full-bodied green candle. Everything is green, and it looks like this thing is going to the moon, especially when it's at a key area of resistance. But then it comes all the way down. We call that a swing failure pattern.
Yeah,
So
Tony, it
these
reminds me
candlesticks will
of
provide
if
you
you, I don't know if you're a
with
poker
huge
player. I
amount
talk about it
of
all the time. I do love
information
poker.
as to what will come
It's one of
next.
those things where,
So
like, if you
learn
sit
the
down at a poker
candlesticks.
table and you
This is a
cannot
very bullish
identify
candlestick. This is what I'm
the
talking about.
fish,
At one point,
you are the
this
fish.
candle, this red one, would have looked
You
like
are the
this.
exit liquidity.
Very bullish. But then bears fought all the way back and ended up closing it the way that it did, which turns it into a very bearish candle, meaning you're probably going much lower. All right.
Even just these charts.
Look for bullish engulfing candles, bearish engulfing
I don't have a
candles.
printer,
you
but if
watch
I
my
did,
shows,
I would print out these charts.
2 weeks ago, I told you the 5-day time frame had a
Does anyone
bearish
else hate
engulfing
printers?
candle
Like, they never work.
coming into a very
You know what I mean?
key high, the parallel channel. How
many
many
people are
of you
watching this?
remember that? You can let me know in the comments. And look at where price
I don't
is
wanna
at
scroll.
now, right? We've dropped
22.
a few $1,000s.
22 people on the
since
Zoom?
then. So it will help you to
Well, we can get
identify
more than
these
that.
things. Okay.
Oh my God, Tony's
Types
new
of
messages.
chart
What the heck?
patterns, also very useful. Now you can pair all
didn't
of these
realize
things
that.
up. Chart patterns, candlesticks, line all of these things up. And the more confluent information, when I say confluent, you
I didn't notice there's a bunch of
probabilities,
chats. Hold on, let me see.
right? If a reversal candlestick is giving you a probability
Whale slides.
that,
what is this?
price may bounce.
I have a copy of the
if you have
slides.
key support, that's another
Wait.
probability that price will bounce and hold support. Now, if you have a
Guys,
bullish chart pattern
what the
that's
heck?
combined with all of that, these
Is
are
this actually their
stacking the
slides?
probabilities and creating confluent factors that are telling
When did we
you
post
price
this?
is going to go up or price is going to go down. And the beauty of
the
chart
heck?
patterns is you can
Here, do
work
you guys want
out
this?
how
Boom.
high or how low
I just
price
in the
will
chat
go,
dropped the
because
slides.
they're pretty accurate in determining price
I'm going to drop it
targets.
into
There's only really
as well.
a couple of ways
Into
that
the
you can
banana
get
zone.
price targets. One good way is by understanding chart patterns. Then you know I can enter here and I can probably take profit over there. That's one way. You can look at Fibonacci retracement.
I haven't looked at
or
these yet, but someone just
extension
posted it in
for
chat.
price targets. And then if there is prior chart history, meaning price is not in price discovery, but there's prior history that you can use from the left-hand side of the chart, then you can look at things like liquidity, where there's a draw of liquidity, right? More on that when we get to this section. So chart patterns, right? I'm just simply going to give you the ones that are the most important in crypto that I've seen work out over and over again. For a very, very high time frame chart, it's going to be a cup and handle formation. So quickly showing you that over
Yes.
here. Here it
Guys,
is.
they're like sharing a bunch
Cup
of
and
links that I'm
handle
sharing with you
formation will
guys.
give you,
What are these?
You know, you'll get in a bull run, like you'll see on each asset class, maybe once. So this gives you a macro viewpoint of where things are going to go next. That's one that's very useful. The next one that you're going to look for, which is the most reliable of all time across any asset class, in my personal opinion, and that's ascending and descending triangles. So prices putting
you guys
in
are not seeing what I'm saying, but
equal
they
highs,
posted a link
but
to
higher lows. You measure the yellow line
a
from the
bunch of
base of the
different
triangle
candlesticks
to the top, and that gives you a
and
target
examples.
point. Okay.
All right, if you guys are
and then the other one
insane,
that repeats a lot in crypto
I'll
and is
put
very
these
useful
here.
is going to be bull flags and bear flags. Now you need to be agile and adaptive when trying to identify these, because it can be a flag or it can be a pennant. They're almost
cool.
exactly the same thing. It shows
as long as you understand
a
how to
big
use
move
the
up,
fib.
a short-term
You know
correctional.
how I use the fib? I use the fib to justify my bad trades. That's what I use. Oh, look at the fib. It was a great trade. Should have worked. The setup was amazing.
High time frame. Look for those cup and handles. We saw it play out on gold. We saw it play out on the S&P 500. We saw it play out on Bitcoin. We're seeing it on Total 3 potentially playing out, right? Total 3 still might have another move up of about an 80 to 100% move, and we can determine that based on the cup and handle formation that's currently forming. On the lower time frames, you know, this can be anywhere from a weekly, daily, 4-hour, even an hourly candle. You're going to see that ascending and descending triangle and the bull and bear flags. Those are the ones that you're looking out for. So here was the cup and handle, just to highlight. Here was your cup and handle on Bitcoin. There's your cup. There's your handle. And let's see the measured move. So and this is even if we're being really conservative, we're going from the bottom of the cup to the neckline. So here's your neckline. There it is. There's your neckline. So you're looking for the breakout. Let's go all the way to the neckline. It's slightly slanted, but nevertheless. And then you work out your measured move. And what do you know?
I don't have the
is
chat up right now,
exact
guys, because I don't want to cover up too much
where
of what
price is right
he's
now.
cooking here.
Look at that. From there to there, and where's price?
Covers up
Let's
a little
run it
bit
to
of
the
it.
left. Where's price? There's price. So the cup and handle is played out. Okay, I didn't even plan this. I'm just showing you guys. And now you have major reversal looking
Adam is
candles,
taking his
similar
notes.
to what we had, yeah. Similar to what we
Love
had
to hear
in
that.
2021. So that's why pay attention to what I covered over here for you guys, the 21 EMA. If you start to lose that, I guess it's not a good sign, right? If you do start to lose that,
the
it's
most
not a good
impressive
sign.
thing I'm
Now,
telling you, might be
could
watching him click through his
just
tabs. There
correct,
are a million
but either way, it's
tabs,
giving you valuable
and he is
information.
like
what it's telling you is
going to the exact one that
based
he's
on the
looking for.
Covenant
I have like 3
formation,
tabs open, and
price
I
has
struggle
now
to find the one that I
officially
want
met the
to
measurement
look
target.
at.
That's the first thing. Secondly, you have these rejective looking candles at a major high, which tells you at minimum there might be a bit of a pullback. So you'll be hoping for that pullback to find support between $87,000 and $100,000. That's going to be the key areas of interest. All right. So maybe we should reserve this stuff for next week because I don't want to overwhelm you guys. We have still to cover the market moving in different phases. Maybe we'll reserve this for next week, which is going into the ranges and the trends.
Nick says resistance at the exact
Let's just see
target
what
of
we
cup
have
and
here
handle.
for next
Amen.
week. We've covered a lot. Risk management, support and resistance, candlesticks, chart patterns. We can reserve ranges and trends, moving average strategies, market cycles, portfolio structuring, and then we'll finish off with all of that. So what I will make mention of quickly is that, the market moves in ranges and trends, which means that it can go sideways and then it can go up and down, which annoys people, but that's how the market works, right? So ranging would mean you're chopping between 2 areas of support or resistance. So you're above support, below resistance, and you can't seem to break out. You're just bouncing between the two. You can make money in that environment by trading the trading range. There it is. Up, down, up, down, up, down, long, short, long, short, long, short, all the way through. And then eventually when you break out of that range, you move into a trend, which is either an uptrend or a downtrend. Okay, so we'll dive into that a little bit more because I want to tie that in with the market cycles and Wyckoff accumulation distribution. We're going to focus on that next week. Maybe what I'll mention to you very quickly is moving average strategies.
Gosh, I've been completely neglecting YouTube.
That doesn't
Sorry,
need to
anyone
be
chatting
too
on YouTube.
difficult. All you have to do is
I've
put
been
the moving
neglecting
averages
you.
on your chart and look if they're up or
My
down.
bad.
If the moving averages are
All
sloping
good.
towards the upside,
Still love you.
it's bullish. If it's sloping towards the downside, it's bearish. So you guys can write the numbers down, and then any of those questions that you have, get them ready because we're going to bring the team on in just a minute or two, and you can ask them as many questions as you have. So the moving averages
good
that
questions.
work for me, and maybe I'll just write
If you
them
guys have
down
questions,
so
can you guys throw them in the
there's no
chat? Here, look,
confusion.
I'm going to give you guys my first
Let's
question.
throw
Here's
it
what
on
I'm
over here.
going to put.
Now, wait, where did my
It's
little
long.
thingy go over there? Let's put it back. Okay. MAs and EMAs.
Here's my question.
And their time frames, right?
Check that out.
Okay, and their time frames.
That's what I want to know.
Let's work from the top down. All right, so on the weekly time frame, there we go, weekly, I think that it makes sense that you look at the 200-week MA and EMA, okay? In extreme situations,
This is super
like
helpful,
this
by
is
the
more
way.
for the bear market.
This
you'll
is a
come and
good
you'll
part to
test
pay
that.
attention to.
Okay, so we'll let's do this, and let's throw that down. In extreme situations, you'll come back to test that. 200-week MA and EMA. You want that on your chart. Then you want, for this cycle, you want the 21 EMA and the 50 SMA, which is a simple moving average, also known as the MA. Simple MA and MA is basically the same thing. EMA, exponential moving average, gives higher weighting to the more recent price action. Okay, whereas the simple moving average just divides the last days up equally. Okay, so 21 EMA is the one that I've given you. I say 50 SMA as well for this cycle. Maybe not for the future cycles, but
I always
for this
thought the
crypto cycle, there's been a
exponential
lot of
MA,
tests
the EMA
into the
should
50,
be called weighted.
where price
MA,
uses the
WMA,
21
but,
EMA, but tests the
whatever.
50 and then bounces. That's why you want that. So that's what you want on the weekly. On
If it's
the
weighting the most recent
5-day,
weeks, it should be called the weighted one, but weighted
you
average.
can put
but
the 3, the 9, and the 30 MA. Okay? You have to know how to use these in conjunction with each other. So full bull move is when the 3 is above the 9, is above the 30, and price is above all of those. I cover this on YouTube even today. So more on that next time, right? Ask the team if you want to know about that. They'll explain that when we get to the question section if you are confused. Next one I use is the daily, right? So the daily I like
I'm
to have
taking my notes here.
the
So,
9
here, guys.
and the 18 EMA. But really, all you're doing is putting a relatively short with a longer term moving average, which means you could do, for example, a 10 and a 20. You could do a 11 and a 22. I use the 9 and the 18. I like that one. You don't have to use that. Again, it's almost going to do the same job at 10 and 20, 11 and 22 EMA. It's going to do the same thing. That's what I use on the daily. And then I also like to always see more or less where's that 200 EMA and MA on the daily. So for example, right now I've been looking at that because when the 9 and 18 cross down bearishly, so below each other, and it's compressing price down, then I'm going to be looking for that 200 MA EMA cluster for support, which right now is between $100 and $101,000, which is a significant area. And then on the 4 hour and hourly time frame, so 1 hour, 4 hour, I like to just look at the 50 and 200 EMA. That's it. Okay, so those would be the levels. There it is. You can just screenshot that if you want. All right. And that's it. Those are essentially the levels when it
Don't
comes
worry, guys.
to...
I got you,
and
guys.
I'm just
I took the
saying
notes.
this quick because we'll save the time then for next week to not focus too much on the EMAs and the MAs, because you can look up any YouTube video. They're relatively easy, right? And you can just go through the course content. Unlock the full access to the course. Everything is there for you guys. All right, so we've covered essentially everything. We are going to go through more stuff. We're going to go through next week ranges and trends. Then we're going to go through.
We have another one next week.
Market cycles and portfolio structuring. That's the focus for next week. Let me know in the comments if you enjoyed that, and then don't run away because we are going to bring the team on. For those of you that have questions, we want you to ask away, right? If you have anything you're confused about. When is the bull moon? Yes, the 7th of September. Okay, so if you guys can just put up your hand, just raise your hand over there. I'll give you guys the spotlight, and then we'll jump away. Oh, by the way, before they go in there, okay, Waz, I'll put you in so far. Just there we go. Let's see. Can I even do that? I think it's someone else that needs to give you control. One of the mods or someone. I don't have access.
Oh, wait a minute.
Yeah, Kyle, just say who needs to be given.
It's Waz and Chris and Josh. They have their hands raised. If you, okay, he's been spotlighted.
Okay, guys, we're just sharing the screen. So if someone comes in and they don't have pants on, it is not
Chris
my fault.
well.
Dex, if you can spotlight them.
I'm just straight up sharing what's going on
give
here.
them co-hosting permissions.
Yes, if you just put them as a co-host, and
Waz
while we wait
is the
for
man.
that.
Every week for the next 4 weeks.
Again,
Perfect.
Dex,
Script the Kid says we have every week for the next 4 weeks to look forward to this. They're getting some technical issues sorted out. Oh, this is Whale Room, by the way, that they're sharing. I know Crypto the Kid preaches about Whale Room. He says it's a great spot to go and learn. I believe that's a paid Discord, though, so I'll look into that. Maybe we can get a discount. I don't know. Could happen. There is a free option to get in there as well. It's like a 14-day trial or something like that. Crypto the Kid says, letting you guys know that Waz is the best and most knowledgeable trader slash, God, I can't talk. Sorry, guys. Slash scalper that I've ever come across.
Sections in Whale Room and just answer any of the questions that are out there. And guys, I'll see you on the next one. That's it from me. They're going to take over. They're more than capable. Absolute
Kyle's
legends.
gone.
And I'll see you guys on the next one. Cheers, guys.
Kyle, thank you so much for joining.
Thanks, Kyle.
Goated.
Cheers, Kyle.
All right, well, there he goes.
Alrighty. What's up? What's up, Wes? What's up, Josh?
We'll stay here. We'll chat with these guys for a little bit.
What's up, bro? Good, man. How should we run this with the community? Wes, you wanna?
Let's do this. Since it's like the first one, let's do it like a small little introduction. Who you are, who I am, who Josh is, what we do in the Whale Room, and take it from there.
Cool. You first, brother. Kick us off.
Okay, cool. So hi guys. My name is Waz. I think myself and Tiri, we've done Whale School probably like 16 times because we were part of the first group. So started out with Sniper School, started out with Whale School. 3 years later, yeah, I am.
Okay, they're doing an introduction, guys. We can chat here while they do their introduction. So a lot of the stuff that we've learned today, we've actually gone over in the courses, right? In our whale school courses, and we're on chart patterns. I think we're still on chart patterns. Maybe we advanced stuff at chart patterns, but if we're going to be doing these weekly, I am going to try to start getting a more consistent streaming schedule so we can watch some of these and really learn to trade. The thing that I have to figure out is like, what do we do when we're not learning, right? We got to keep it fresh. We can't just like pack all the learning into one day. So if you guys have ideas, let me know. Crypto the Kid said we can play some chess. We can play some poker. I'm okay with those things. We could go to the trenches and we could go torch some money if we want to have some fun. But if you guys have ideas on like kind of content ideas on things that you guys would like to see us stream, I'm happy to do that. I have the desktop muted right now for the most part. I'll let you know once they start actually answering some of these questions. For now, there's not much going on. They're talking about like kind of their trading strategies, their trading styles, which is cool. I'm sure that that's important. Not super important for us yet. One off. 14-day free trial for Whale Room, by the way. And chat on. Turn it back on.
I remember.
Sorry, I
when
didn't
we
realize the
first met,
volume was down. Don't worry.
and
I was just
that was
getting
my
some
first
things sized
introduction
correctly. We have the
to
chat up now.
trading.
I'm going to turn it back down just a little bit here. I'll let him kind of just speak in the
Against
background.
wall and trying to see what sticks. In
There's also these
investment
other
world,
classes,
that
right? We're
you
going to do
are
Whale School, but we could do
familiar
Sniper
with.
School. We could do many of these others.
And
I kind of want to, like, the thing is, though, I don't want to
go
overwhelm us. Like, I'd love for us to get
full
Whale School
180,
sorted out and do, like,
through
expert level there,
dedicated to what
learn
I
to
learned
win.
in
And then
Whale
once we learn
School
kind of
and
those
Sniper School before
basics,
that.
then
So,
we can go to some other classes and some
maybe I
other
can start
courses,
the journey for you guys.
which I think will be really
Try
valuable
and,
for us to learn, just even to get like a holistic idea of
just
like the
make
types of trades
progressive
that are out
steps,
there and how it works.
one day at a
For
time,
right now,
just
even if we could
really
just identify where
build
Bitcoin
that
might be
system,
headed, right? If we can just
trade
look at it and
properly.
identify the trend of some things,
Yeah, that's it from me.
then we can make it
Okay.
happen. And Nick says, yeah,
So
let's do it
those
step by
are
step. I
actually
agree. I don't think we need to like,
Banter. Do you wanna also
I know
mention
that
a few
even if we
people
just like
who are
focus
using the
on
Whale Room
one
for
thing,
events?
if it was like, we're only focusing on chart
So,
patterns
for
right
the
now,
whale room,
it's all that we're going to focus on for the
my
next
screen,
month probably.
the whale
We
room
could
is
already
essentially
become winning profitable traders
the
just by
trading
understanding
product,
chart patterns,
the
how to read
say,
them, how to
for the
recognize
community of
them.
traders.
Like, there's a
We
lot
go
to it. And
through
one of the most important things for
daily sort of
becoming a
updates
successful
on
trader is you
how we're
can't
looking at
overwhelm
markets
yourself with like too many
and
things,
give
right?
sort of
You
trading
have to be able to look
ideas
at it and
and
say, I
motivational
know for a
content.
fact that there's things that I
think
should
maybe
or
Josh,
maybe
you
will
can
eventually learn in the future,
give a bit of an
but I
intro
can't have
and then I'll
my
share the screen
mentality and my
and I can teach
process
everybody what it's
flooded with
about.
too much information, and you get kind of this analysis by paralysis type thing. You want to just be able to focus on a nice, clean, simple strategy, like a repeatable strategy. And then once you have that, then you start adding onto it, right? You have to have that foundation, then you add onto it. What I see people do too much is they try to jump to like the next level. You know what I mean? Before they're done with level 1. It's like you're, learning math and like, okay, cool. I need to learn numbers. Okay, you learn your numbers, and then you need to learn add, addition, subtraction, kind of the basic mathematical formulas and stuff like that. But then you're like, hey, I need trig. Give me calc. Give me linear algebra. Give me geometric calculus. Like, you can't learn geometric calculus until you learn the very basic fundamentals, and you have to have a foundation to build on top of. And that foundation is what is going to allow you to go much higher, right? The wider the base.
Extremely accurate.
What's the thing?
So I pride myself
The higher the
on
space, is that what it's called? I
solely
forget the saying, but something like that, right? You want to have a nice wide base to be able to build up in your knowledge.
I like trading Bitcoin out of any other thing the most. I love the price action, and yeah, my goal is to guide everyone through to potentially the cycle top.
They're still
right?
just
We're
doing
using the
introductions.
pitfalls,
They're just doing introductions.
which
Lots of introductions. Cool guys, I'm sure. I know Crypto the Kid said this Waz guy's cool. Josh seems pretty cool. So does Chris. Their backgrounds are pretty solid, but I'm not sure it's like overly important here to listen to.
Next bear market, obviously into the following bull market. That's what we specialize in, right? We macro analysts as well.
Crypto the Kid said master the basics, long game, and he's done this, by the way. He is the one who turned us on to Whale Course and Kyle. So like, he is the person that I'm listening to when we look at this. So he definitely has a solid idea of where we're at right now and where we're going. So, we can accelerate our learning. This is the other thing. I know Crypto the Kid found Whale School. He found Whale Room, and he found it really helpful. But like, we can definitely accelerate our learning by attacking it on multiple different fronts together. You know what I mean? Like, if you're going it alone, it's like anything. If you go alone, it's going to be really difficult for you to achieve the heights that you want to in a certain period of time. But if you're able to like bounce ideas off of each other and say, hey, this is what we think is important. This is where I'm going to focus. Where did you focus? Oh, you're finding success here. Let me take a look. All of a sudden, it just amplifies your win rate. It amplifies the magnitude of when you win, and it's massive. So
cool. So yeah, Chris, you can go through.
Let's get some questions. If people have questions on what they learned in the workshop today.
Okay, they're trying to get questions in now.
And while we get that, let me show the Discord. Who here is interested to see a bit more of what the Whale Room is all about and what we actually do there on a daily? Just want to hear that. Is there people who are keen to check it out? Okay, cool. At least as long as it's
turn it back up now. I think we're gonna get into questions
let's
here.
Go through. All right, so. That would be the screen over here. So here we've basically got the structure of the.
Okay, they're talking about Whale Room right now.
So you'll see that there's different traders. There's here's Kyle's section. Kyle comes in and basically before all of his shows, he comes and gives a write-up of what he's expecting, what he's looking for. He drops the institutional charts with the different heat maps. This is something that you'll want to learn more and more about once you get through Whale Room. It teaches you where the orders are sitting on the charts, not just looking at technical analysis. Then we've got my section where I've been dropping the sort of macro charts today, just looking at sort of expectations from the market, where we want to be looking to position ourselves.
So Whale School has a free 14-day trial
part of the cycle
for Discord. If you guys want to get in and check it out.
I've also got a psychology section, which really focuses around traders' mindset and getting your headspace right, so that when you're not looking at a chart from an emotional perspective. And then this is my educational section. So this has been built up off of requests from members in the community. You guys put a request out and say, look, I want to learn more about leverage, or I want to low leverage, I want to learn more about risk management, or how to use the FIB, or anything really from beginner through to advanced. Then I'll build content and generally put together a video and put it here. And that becomes then a library that you can search. So then you can say, well, you can come here and say, I want to learn more about the FIB. And then all of the content relating to Fibonacci would come up here and be right. And you can then search it and kind of take your learning to the next level. We also have Farouk. He's our professional scalper. So he does a lot more lower time frame trading. You can see his P&Ls coming through here from trades that he took over the last couple of days, drops his charts and his sentiment. He also looks at trading gold, and he's got his educational section similar to mine. Then you've got Waz over here, who's looking through.
Okay. They're just going over the structure of Whale School. We don't need to. We need to watch that right now. We'll get in with our free trial if we want. So I'm gonna let this run in the background while we do this. I kind of want to like. I mean, I find value in going over Whale School a few times, to be honest, and like we're gonna watch this together. We'll watch this back on Monday for those who missed it, and we'll continue to kind of talk through it. Although it's gonna be me talking over myself as well, which might be kind of confusing to some people. But risk management is, you want to talk about the foundation. I'm so glad that they started with risk management and bankroll management, because if you have good, solid risk management and bankroll management, then you could be up against a trader that is 5 times the trader you are, 100 times. It doesn't even matter. If you have a better understanding and relationship with bankroll management, a little bit late, Crypto Boy, but that's okay. It's recorded. I'll throw it up. You'll be able to watch it. If you have a better relationship with those two things, then you're going to win. It's like, again, I always go back to poker. It doesn't matter if someone has a better nominal understanding of game theory optimal strategies, so they are a better poker player than you. If they have like a better understanding and they can implement those strategies better than you. But if you have a better understanding of bankroll management than that individual, you are going to win over the long run, because they're going to take spots and games that they shouldn't, and they're going to lose more money than they should, and they're going to be struggling with, they might go broke, they might have to borrow money, they might have to be in, they might get backed in certain games where they only have 50% of themselves. So like, even when they win $1, they only win 50 cents. They might get behind when they get backed, and then they're in makeup, which means every dollar that they make, they're having to pay. There's a lot of bad things that happen for people if you don't have good bankroll management. Ted, man, you're the GOAT. Crypto Boy said, "Man, am I late?" And he said, "You are." Ted said, "But you're here now, fam." Zane, thank you. Yeah, I try to explain stuff and break it down a little bit easier for people to kind of get and grasp and understand. They're just going over the Whale School structure, or not the Whale School, the Whale Discord structure. So that's why I'm not listening to it that much. We'll be able to check this out with our free trial link. I'm still waiting for them to kind of go into answering questions. There are some good questions in the Zoom chat, so people are talking about it.
I saw one up. Let's take a question in the meantime. We have one hand up.
Yeah, this stuff is great.
To ask any questions, you can tap the reaction button. It's the little heart.
Can you tell me what indicator?
And then you'll see that there's hand.
I'm looking at the questions that they're asking in the chat, and I'm going to share them with us as we go along. We do have questions down here, so I'm turning it back up.
Oh no, here we go. So, oh no, you can come through. You should.
Hello, can you hear me?
Yes, we can.
Yes.
I have a question. I want to. I did multiple schools in the Banter community, and I think for me, I thought the real room was for me the best. I think, but I cannot join it because I cannot miss the $400 for 3 months in one time, and I don't have credit card. So, is there an option to pay per month by PayPal or Ideal?
Very good question. I saw your question in the chat earlier.
Okay, this guy's just asking how to pay for a whale room. We don't need to worry about that. Yeah, I'll ask my question. Do you guys have any other questions that I should share?
Is the situation that you don't have a credit card? Because I know that quite a few members, what they've done was they've gone to the bank.
Okay, hold on. They're literally talking about how to get a credit card. Okay, if we need to learn how to get a credit card, guys, we're in deep. We are in deep. Okay, we'll get our question. We have our one question here. No, Kyle's part of it has ended. Now they're in the Q&A section. They're cool. Okay, I'm gonna start with this question, and we'll see kind of what happens with these guys.
Makes sense.
Yeah, so if you join the 14-day free trial, then you can open a ticket and I'll help you in the ticket.
Where can I see that with the ticket?
So in the chat,
how do I raise my hand?
It. If you join the 14-day free trial that school is offering, which is amazing,
recognize hand.
Then you can see.
Chime for raise
here we
hand.
go, and then you'll have access to our ticket system there, and then I can see if I can organize something through PayPal. At this point,
Open
as we said, it's just crypto and credit card. But
there we go.
Join that. And
okay, we've raised our hand, boys and girls. We can ask her.
Can I join it without payment, or how it works? Because I don't have credit card.
Actually, you have to have a credit card to join this.
Yeah.
Okay, but I'm sure you'll be here next week. Let me see what I can come up with for you, and then I'll chat to you next week about it. You can just tag me in the messages at the next workshop. Is that okay?
Weisenbergen.
Of course, yes. Thank you very much. I will be happy.
Fantastic.
Weisenbergen.
Okay, thank you too.
Let's go with Soka. Nice name. Soka, it's your time to shine. I'll ask you to unmute and you can come through with any questions that you may have. Soka, waka.
Okay, I'm just going to respond to Marius. If you are signing up with the link above for the 14-day free trial, if you have not used the free trial before, you will not have $159 deducted from your account today. You will get free access for 14 days. And if you choose to stay with us, which we really hope, then after 14 days, it'll automatically deduct the fees. If you choose to cancel, you can also cancel, obviously, if you don't want to stay with us. And you won't be charged again. The 14-day free trial is free once to each client. So if you haven't taken it, then you are most welcome to join us, and we would love you to be on the server, and you will not be charged. Soka cannot unmute.
No, I'm here now. I think it works. You guys can hear me now, right?
Got it. Thank you.
Go for it, bro.
Perfect. Okay. First of all, thanks for putting this on and thanks for having it. A lot of great alpha was dropped before, and I appreciate you guys going through kind of everything that you've gone through already so far. It's super helpful, and I'm just happy to be here, and thanks for sharing it. So my question is, so Whale Course, it's been really helpful in kind of introducing trading, and like Kyle said before, people do have kind of a short attention span. So you have to kind of balance these high-level concepts with like the technical details and tools. How would you guys recommend going about learning like the real raw mechanics to analyzing some of these charts? So for example, like being able to set up your own risk to reward red and green boxes that I see you guys, put on charts, using fibs, adding the EMAs to charts and things like that. That's something that I think would be super helpful if you guys can even just point in the right direction, because the high level concept's super helpful. And then you go to a chart and you're like, okay, now I have a blank chart. Now what? You know what I mean?
Yeah, I know exactly what you mean. So I don't know if Chris and Josh maybe wants to add on, but I'll just touch on it quickly. I'll say before you do anything, just zoom out and you need to know what you're doing. You don't necessarily need to know whether the price is going up or down. Knowing what you're doing could possibly be knowing certain terms so that you can participate in conversations. Knowing what you're doing could be knowing how to navigate the exchange.
That's interesting.
Knowing what you're doing could possibly be, doing something like a quick Google or a YouTube search, the difference between EMA and MA, just so that you understand what it is. And then also understanding that there's levels to learning. So for example, when you do a quick little search on YouTube or Google, or whether you ask ChatGPT, you could maybe ask for a number of results pertaining to your question. And then on your search results, you could maybe filter that by likes or views. That's basically common sense. But if you zoom out even further, the ability to self-learn pushes you or gives you an edge over everyone else that can't, if that makes sense. So when it comes to the attention span type of thing, if you basically someone who spends a lot of time on social media or all these platforms, you're probably going to be scrolling a lot. So when you
I
are
do
in
spend a lot of
trade,
time on
you
social
need to have a
media.
look at your time
This
frame,
is true.
whether you're waiting for candle closes or whatever the case may be. But understanding that you would probably need to get used to or try over a period of time to start maybe focusing a little bit longer. That is also gonna give you an edge, because that helps with patience, that helps with confidence, and stuff like that. Does that help?
Yeah, no, that helps a lot. And I think that, you hit it, and it's why I appreciate Whale School starting with risk management. There really is this like idea of having a strategy and like going through it in kind of a linear process. So I appreciate that answer quite a bit. So zooming out, knowing what we're talking about a little bit, having a strategy, because like you said, self-learning and being able to do that is really important. So I do appreciate that. Thank you.
Okay. No, I asked because I should probably just put a thing here. I'm trading meme coins, right? So let me put this preset on. Okay, so it should sound and take profit by itself. But yeah, I hope that helped. Just the ability to self-learn pushes you or gives you an edge over everyone else. Maybe have a look at having a lower time frame plan, a medium time frame plan, and also a higher time frame plan. I don't know if Chris or Josh wants to add anything to that.
So there's a few different aspects when to trading. On the one side, it's easy enough to learn how to use the fib and how to draw a trend line and these things. The next level is waiting and remaining patient so that you're not over trading, and making sure that you're choosing the right times to enter and exit. You want to make sure that price is in a high conviction zone or high confluence zone where you would
I have my
expect
pin bar
bulls
question
and bears to defend price, which means that
Hold on,
in order to do that, your
What is our
first
pin bar
step
question?
and first goal is to zoom out and like Waz was saying, and make sure that you're getting your support and resistance levels in check. Because if price is in the middle of nowhere, doesn't matter, drawing fibs and measuring things and trying to see a break of trend or something like that. If price is in the middle of nowhere, you're only going to catch very, very small choppy moves. But if you wait for price to enter into high conviction areas where confluence would likely
I found it. I found the
create
question.
sort of, there's a higher probability of there being a decent move there, you're more likely to get a winning trade. So first step is obviously learn how to determine how to use the tools and the different indicators, but more importantly, learn when to trade so that you're not over trading and trying to jump in on every single green candle or red candle, but wait for the right ones, So, and then the last thing is when it comes to sort of drawing risk to reward. So, I mean, we've got this link short that's running at the moment, right? So if I share this, so we were looking at link, for instance, last week. Now, when we marked out this trade, price had just sort of broken down, and we were sitting somewhere down at around $23. So we looked for then a 50% retrace back into that sort of golden pocket for the entries on this short, right? Now, when you put your risk to reward tool, I can delete it and kind of show you how it's done, but because this was the one that you'd come and select your short, and then you'd say, well, okay, I'm going to enter on the 50% retracement. You need to then know, well, where am I wrong? So currently I was saying on that price action has sort of been setting these higher highs and higher lows, and you've now broken down and you've essentially shifted structure. So you've now you're no longer
this is super helpful, by the way. This is what I was talking about. Seeing kind of these tools on TradingView to the left side, so that we can set our own
also broken from that
boxes and things like that.
Expansion towards the upside. So you can see that price is losing steam. So what I'm looking for is that I'm looking for a lower high to then form up.
No, wasn't there a question about the pin bar?
Changes from this higher high and higher low.
What was our other question, Drew?
Lower low, lower high.
Was it about that one question that we got wrong on the test and we were mad about
towards where then again I'm going to be looking at.
I have another question here that says the answer is B, right? But doesn't the size of the candle matter? Because the lower wick needs to be greater than 50%.
Waiting for that, looking for an area of interest where I would expect bears to defend this sort of push down in price. If you think that bears stepped in over here and pushed price towards the downside, if price gets acceptance back above that level,
we could do
then the bears that are controlling price action over here are going to be underwater. So I would want to say, well, if price action can sort of push up and get acceptance back above that level, then the bears are no
I'll do it. I might get kicked out though if I ask this question. I might get kicked out. Just be ready for that.
So, and my sentiment to the trade is wrong, right? I'm wrong. Price action is probability of the price action moving towards the downside is less likely now, and subsequently my short idea is invalidated. And so wherever my short idea is going to be invalidated, that's where I want to have my stop loss, right? And sort of above that level, right? And then you're going to have your entry, you map out your entry, and then you look for take profits, and you're then going to drag that down and say, well, I'm going to start taking profits here, right? So this would be take profit zone over one. Over here would be take profit 1 at that 21-day EMA, the blue line, and the 50 where they align. And now that you're underneath, you can then say, well, down towards, you then start.
I can maybe rope those two questions in together.
Into liquidity pockets, which we can discuss more in whale room.
I also don't want to hog the mic.
As long as you're now
like, I don't know if other people have questions. I don't know if there's lots of questions up here.
Lower high, lower low, lower high. Then essentially you'd expect then price to then come back towards the $19 over here, which then gives you that risk to reward of 1 to 4. Because you're saying, well, and my entry was at 25.50, my invalidation was at 27, and my final take profit is around 19. So that gives me a risk to reward of 1 to 4.
Well, yeah, but if your final take profit is at the very bottom, then obviously you're not going to walk away with 4 to 1.
A trader tool that Kyle was speaking about to determine how much risk to capital, like how can.
Yeah, we'll see if I can't be pushy.
Trade. Do I want to risk 0.5% of capital, 1% of capital, or the like, and then you take it from there. So to recap, you aligned your higher time frame.
Well, someone else asked to ask a question, so like I don't want to hug the mic. This person said, "Can I ask a question now?"
Be a good area to enter. You can see
they've spent a lot of time on
ours. We even went into the red here for a bit, but failed and got acceptance.
I'll try to slip it in. We'll see if I can be gutsy.
And then it started to
push my way through.
Right.
So
if, for instance, you had set your stop loss a bit lower into the 618, you would have been stopped out, and then price would have moved without you. But so you can't just put your stop loss anywhere. Your stop loss needs to be where you're going to invalidate that position, that trade. Okay.
This was a good answer, though, by the way.
How's that? Does that make sense? Does that answer your question?
Makes a ton of sense. And even just watching you go from TradingView and like use those tools on the left side, and just like watching how you kind of mark up a chart was really helpful. And I think that's where much of the question comes from as well. So I think Waz hit it from kind of like a high level, having a strategy, and Waz said said something about trading meme coins. We know that DGen world very well. If you ask a DGen, what's your strategy? What's like why are you getting into this trade? What's your thesis? There's usually a lot of nothing. So I appreciate that for sure. But you going through and just sharing mechanically kind of how to even mark a chart up is good to see visually, and see like where you're kind of grabbing those tools from on the left side of that trading view. View is great. So appreciate it. I don't want to take up more time. I know we got a lot of hands, but I appreciate that. Thanks for everything you guys have done. And I don't know if you guys have social handles, but if you do, if we could find them somewhere or drop them in the chat, it'd be great so we can shoot over follows and make sure we're, keeping up.
Yeah, sure. My name on Twitter is Christopher Columbus. I'm not sure Wes and Josh, but yeah, I'm Chris Columbus. I'll find it and post it if you want to follow. Or you can just have a look.
That'd be great. Oh, here we go. They just dropped them all.
At Columbus. Yeah, there we go. At Columbus Trades.
Perfect. All right, cool. Well, thank you guys. Thanks so much.
Awesome, man. And yeah, so I'm very much a structural trader. So I trade structure. So I try and always stick with the trend. The trend is your friend until it bends. I don't counter trade the trend ever. So if the trend is to the downside, I will only go long. I don't try and go long off of the 618 fib. I will see price action hit the 618, look for that, and then look for the higher low. Look for the shift in market structure to see that the trend is then reversing from that point, and then I will enter. So I've never been one that just trades indicators. I always want to just kind of look for a solid risk to reward entries in line with the direction of price.
Love that. And I just shot you guys a follow that they dropped it in. And like I said, I know there's a few more hands. If there is time at the end, I do have a few other questions, but for the most part, I want to yield the mic to other people. Appreciate you guys.
Awesome. Any other questions? Who was next? Was it Texas Rick or was it Hynex?
I'm not sure, but we can go either one. Let's go alphabetical because it's only two. Let's go with
cool.
Hynex.
Hello, Chris.
Okay, once these questions go, I'm going to jump back in there. I'm going to ask them, why did we get our question wrong? I want our credit back. We were like 15 for 15 on these things, man. I think this is what
has been killing me with my trading, actually. It's about placing stop loss, because I try as much as to manage my stop loss risk. So like just example, this trade you shared here, I was trying to see where your stop loss is. It was like 4%, 5%.
Nah, you haven't said anything wrong. I think Tidon is just giving a.
Most of the time, I try to close my stop loss so I don't lose.
I'm pretty sure TEDx has been awesome this whole stream, and Andrew Cool, of course, is an OG. Part of the reason why we were like 15 for 15 or whatever. We had so many questions right in a row, and then we got tripped up on that one, dude.
Give yourself that kind of big stop loss.
And it was about a pin bar candle, and we have a PhD in pin bar candles.
How
so
you manage your stop
I
loss,
have to
because most of the time my stop loss is so tight, and
Zane says stop loss is important. Yes,
I get stopped out easily. The whole thing comes with my risk to
very
reward.
important.
I'm trying as much as to follow the whole rule. But so play me how you.
Hey, what up, boys?
How did you? You're
space.
a professional. How did you come about losing your stop loss? Like, how do you manage it like that?
I see him. Boy T Spaces.
It's pretty straightforward. If you, for instance, have let's say
because we actually looked at this the stop loss side. Boy T Space is commenting basically on everything that I post, and I really appreciate that. Like I said, it helps so much with the algorithm. I actually see a lot of people here who comment on basically every post. They got notifications on X, and that's amazing. Cool says this answers about risk management. I agree. We're going to turn him back up.
What's that?
Answer.
$100 trade. Let's bring this up. Right, so I'll bring this up here. Let me just open it.
Thank you.
So like Kyle went through this in the session today.
Yeah.
I'll just bring it up again for you. So yeah, you've got Better Trader, right? So let's say you've got $1,000 your account, right? Your stop loss, the stop loss that I had on
we know how to do this
Chainlink
here.
is about 5%. Now, when you you should never look at trading as an individual trade, right? You're looking at trading as developing a system so that over time, over a pool of trades, over 20 trades, your P&L increases. It's not about the individual win. It's about implementing a system that is systematic in the way that you take profits and enter into those positions. So whatever that system is, right? As long as it is sort of uniform and you follow a specific trading model, then you will be able to then determine sort of what percentage of your trade you win versus what percentage you lose. Once you know how many you win versus versus losses, you can then say, well, if I'm winning 2 out of 3 trades, then I need to okay, I need to have a minimum of say a 1 to 1 to 2 risk to reward on my trades, and I need to be able to kind of take X amount of trades to be able to be profitable. So you'll learn all of this over time. That then helps you determine what risk level you can take to your account, because now that you have a specific set system.
Yo, Mac, what is up? How's it going? Hope you are having a beautiful Monday. Adam, face reveal. Oh, it's all good, Mac.
Now
he says, sorry, I'm late. No need to be sorry. Adam, when face reveal, I don't know, actually. I kind of look like my PFP a little bit. I have those exact glasses, I feel like. Although the monkey looks a little bit cooler than I do, I think. I don't have a calculator like that anymore either.
Stop loss like I said, your stop loss needs to be where the sentiment
reveal. All right, we'll do an IRL reveal once we make our $16.9 million that were promised from the start of the course. We'll do the yacht party, and that's where you guys will get it. I'll invite everyone. We'll go to the yacht. I think we are handing out $100,000 briefcases to people. I think we promised it to a few above, so we'll see.
You're probably just going to get stopped out and then sit there and cry later because the trade plays out without you, right? So that's why then you say, okay, I'm going to take a 5% stop loss.
Right? They're cool sending it.
That you can only then you're taking a much smaller position, but you're going to end up with a higher win rate, right? Because you're no longer trading with your stop loss within the entry box.
These questions, it's not a bad question, right? There are no bad questions necessarily, but this is covered pretty extensively in the course. And we have seen Better Trader a few times.
Profitable trades against your losers, and you're able to then create a system.
Adam says he needs 100K and a Lambo.
20%.
I'm not really a car guy.
Rate and are extremely profitable.
Like I don't need a Lambo.
They control this risk to capital percentage and their risk to reward, right? So they will then
I just need a car that like works.
Much higher risk to reward, so higher probability of a large move.
Well, I don't drive that much. I don't go outside that much.
And then
so there you go.
So that even though
yeah, Cool. This has been answered quite a few times. Mac, I see you in the Telegram as well. That's why I've got them a little bit quiet.
They're winning. They are able
because we know this.
Get that money back and still make money on top of it, right? So this would be your best.
Shout out Sonia.
For determining that.
100%. Can I maybe just add something to that? In the hopes that
what's the time of today's winner announcement? It's 250 in Rizzo. Let's call it in like
the first thing I would maybe
6 to 8 hours maybe from now. And then we have a Billy one coming here soon. Another $250. Yeah, Cool, you gotta I know I gotta touch grass. I don't do a good job of it. I need to. I was working out to try to like get healthier, and then I fell off of it because I got locked in. Adam's manifesting some Rizzo. Yeah, we have 250 of Rizzo, and we have 250 of Billy coming next. Projects, they reach out to work together. And what I've been doing is, as part of working together, I am having them host giveaways. Like that's part of it. So sometimes, obviously, you'll take payment, you'll take allocation, stuff like that. But like, I don't have a deal with Rizzo. I don't. But I know their dev is super cool. And he reached out for some stuff, and I said, hey, how about this? I could help out with that. We don't need to have a deal or anything. Just hook it up with a giveaway so that people can have it. You know what I mean? Yeah, I want Zane says giveaway never ends. I don't know if that's because it's a never-ending giveaway, because this one's been going for about a week. But or if you mean never-ending giveaway, like I always want to have a $250 giveaway minimum running. I do. I want you guys to have an opportunity to win every single moment that you're on. You share in the wins. You know, part of the reason why I'm even able to talk to projects and like get them excited about a giveaway is because the engagement and the likes and the follows that their projects get. So when that happens, then I'm able to go out and say, hey, look, check out how good these giveaways are, and you guys should do them too. And then they sign up, and then I can give the money to you guys. I don't make money on these things. I shoot them over straight to you guys. So I'm not sure which one Zane meant, if he meant that the giveaway was very long this time, so it's never ending, or if we have a never ending giveaway, which that is what I'm talking about. I want you guys always to have an opportunity to make money. And we'll spread it out. Like we'll do, you know how it goes. We'll do like a first place, second place, third place winner. I like to spread it out to more people. And I do try and keep it somewhat random, but also, again, the people who are in here supporting, it's random, but you know what I mean.
Just to quickly recap, candle closes above a certain level or below a certain level will also assist with teaching you things like patience, confidence, But if you understand everything that
Adam says, what about Friday spaces? I haven't been doing as many spaces, just straight up raw spaces, because I think there's going to be more value in, I'm actually trying to set up a structure where I'm streaming daily at the same time so that it can be consistent and you guys can kind of have an idea of when I'll be on. And the goal is really to focus heavily on making us money. Like that's kind of the it. And doing it in a way that's like understandable and easy. You know what I mean? Yeah, if you guys have noties on, man, that's always super helpful. Definitely for the algo and stuff like that. But I want to hear this guy's question real quick. Let's see what this guy says.
We're going to go to Texas.
Yeah, I actually do have something to add to that. You'll find that most.
Oh, okay. Never mind. They're still talking about setting a stop loss, which isn't bad, by the way. You absolutely need to know how to do this. And there's maybe some alpha that they're sharing there. Maybe whatever. We have it kind of quiet in the background. We'll be able to listen to it.
All the time, people will enter trades at support or resistance, but the market will chop around a bit and actually have a sweep of liquidity. And in that sweep of liquidity, what you often find is...
we're learning all this stuff. Like, I think that even some of the stuff that they're talking, it's kind of like they're talking that's a little bit too advanced. You know what I mean? He's talking about like specific instances of things that happen that could cause a stop loss to hit or trigger or not trigger. And we're not at the point yet to, I don't want to say not worry about it, but it's like if we worry about too many components while we're learning to trade, then we're going to get ourselves into trouble because we're going to be taking into too much information. Way too much. Again, going back to like poker, when people come to me and they're like learning to play poker, and I'm like talking to them, helping them out, or even coaching them, the first thing I say is play less hands. Just play less hands. And when you play them aggressively. That's it. Let's start there, right? When people come in and they're like, "Oh, okay, I saw this pro and he played 6-8 suited from early position." Yeah, it's because he's a pro and he has a very, very good understanding of GTO, game theory optimal strategies. And so he's going to be able to find the right plays on later streets. You can't because you don't know what you're doing. Same with chess. Whenever you look at chess, they tell you, "Hey, what do I need to do? Like if I'm trying to learn chess, get your king castled by move 5, right? The first opening, a lot of people learn the Rui Lopez, and you get your king castled like that ASAP. Get him out of trouble, put him to the side, and that's like a core principle. There's like core principles in chess. Hey, you want to never move the same piece twice in the opening. Attack the center. Get your king castled. Stuff like that. But then you see these super GMs. You see Magnus Carlsen, Fabiano Caruano, Vichy Anand, Hikaru, Ali Reza Faruja, Gukesh, Ding Liren, Nepomniachtchi. Like you see all these guys, and they don't follow those principles at all. They don't even care. You're like, wait a minute, it's move 31 and their king is still in the center of the board. They haven't castled. Isn't that like a violation of these core principles? How can this be theory, or how can they be playing the top engine move? It's because their understanding is so deep and so vast of chess and the positions that they understand why the king should be castled, where the danger comes from, that the king can actually be safe in the center of the board. It just is very difficult to do. So you have to know what you're doing. But if you as an individual while you're learning chess say, "Oh, you know what? I think that it's okay because I can keep my king in the center of the board and I'll just figure it out," you don't. You get cooked. So these concepts that they're talking about that seem a little bit higher level, we just need the fundamentals, dude. We want to be like a turtle. We want to be able to go inside of our shell and take our profits and have our win rates and make it happen. I do want to hear this question, though.
Hear me?
Yep.
What's he saying?
Okay. So my first question goes back to some of the basics in the actual trading. I've gone through many different courses, technical analysis, look at all your charts, get everything set up. But then
Much
where
love,
I've had a
Tony.
problem,
Thank you so much for joining in.
actually when
It's been a
you're
blast.
in the exchanges and you're going to place your orders. There's so many different order types, and every now and then it can be confusing.
This is a good
and
question
every
right
now
here.
and then I've actually put the wrong order.
It's a really good
down.
question.
So I know that there's the basic orders, your market orders, your limit orders, but then you've got a massive amount of different order types that you can put in, and that itself can be a whole entire training program. So my question is, do y'all have any recommendations on how an individual that's going to be entering into these markets can actually place these orders? Something that's going to give an individual and myself, of course, more education there, because that right there can be a killer. You can put the wrong order down, and next thing you know, go, oh, wait a minute, I wanted to sell here, or I wanted to buy here. And next thing you know, something is not right because you just clicked on the wrong order type.
Who's talking about? I like these kind of questions because it's like if you're just learning to trade, right? Understanding those core mechanics. That's what our question was about, right? We wanted to know very specific raw mechanics of how we can make stuff happen, right? I wonder if, by the way, my stream is going to end. I had it set for 2 hours on X, scheduled. Are they going to kick me out? They better not.
Just take
Hold on, let me make sure.
Bitcoin, for the sake of this example. Bitcoin, we trade in spot, we trade in leverage, we trade.
YouTube might do
it. Which is over the counter. You can trade in options. You can now trade it obviously on institutions are now also on our home ground. So that's things like CME, the Chicago Mercantile Exchange. However, institutions trade leverage on CME. They'll trade spot on the New York Stock Exchange. So your edge would be to have a look. Okay, cool. New York, Chicago. There's 1 hour difference. One of these exchanges must close an hour later. Obviously, Chicago's 1 hour after New York. So, when it's usually daily close.
Yeah, I don't. Please, Elon, don't rug us.
Trading.
Please don't rug us. I should. I think I got cut off a little bit here. They're answering this question.
CFDs, all of
I think that this is something better handled with us, kind of in the back channels. I'll talk about different platforms, different exchanges. The other thing that you have to be careful with on these exchanges, honestly, more than you think, is that many of these exchanges, when the bear market comes, are going to go bankrupt, and you're going to lose your money.
Something like exchanges.
Like
you look at the 24-hour volume.
You have to be careful. Actually, I honestly need to put this in the chat.
So today's Monday. If you looked yesterday,
please be careful
like open interest by
when choosing exchanges.
How many positions are open that have not
many of them will go bankrupt in the bear market and be illiquid, and your funds will be frozen.
That is open. So if open interest, the oscillator, it's like in the form of a ribbon. If it's going up, positions are opening. Compared to if it's going down, then someone's getting squeezed. So at your key levels of support and resistance, when you have those levels identified as step 1, and you're approaching those levels, you have a look at like Josh did.
Oh man, dude, I'm looking. I wish that I could share the Zoom chat. I think some people are going to get cooked. They need to learn what's going on with us over here, because we have some questions in there that I think.
Right. So you can confirm that with something like open interest. Also looking into maybe the difference between.
I hate exchanges. I hate exchanges. Have I ever told you guys my BlockFi story? I'll tell it quickly here. So BlockFi. I had a considerable amount of Bitcoin on BlockFi back in the day because they had really strong yields, and I was getting 20% a month or something ridiculous like that. And it was endorsed by all these really high level people. And it was backed by FTX, which there you go. Backed by FTX. That's all you need to know. So I saw all these people. Okay, it's backed by FTX. They have all these funds. They kept showing all this liquidity, and eventually they went bankrupt, just randomly. Right when the whole FTX debacle went down, and it was exposed that they were exposed to Alameda, and Alameda was had exposure in BlockFi. It was kind of this whole circle where they were using just like Max said, they were using user funds to kind of rotate the profits around. and make it look like everyone was making money. No one was making money. SBF was stealing the money straight up. So I had all this Bitcoin on the exchange, and I actually got some of it off. But I got a letter from BlockFi saying, you took money off of the exchange, but you took it off within 90 days, like, of us filing bankruptcy. And by law, they are allowed to go back 90 days, look at everyone who took their Bitcoin off the exchange, and say that that's actually their Bitcoin that you need to return to them as part of the bankruptcy filings. I had to go to a lawyer, and I had to settle with them. It cost me quite a bit of money, but I did not have to give it all back, which was nice. But the main problem is that they kept a decent chunk of my Bitcoin, and when they paid out on the bankruptcy, they paid it out in November of last year, I want to say. And instead of giving me my Bitcoin back, they gave me back the dollar value that they had agreed to with the bankruptcy court. You want to know what that dollar value was? My Bitcoin, which would now be worth $100,000 a Bitcoin, $16,000. That's what they paid. They paid $16,000 a Bitcoin. They didn't give me back my Bitcoin, and I had multiple on there. I had a lot. More than, I don't want to say, but it was double digits Bitcoin. And they paid me $16,000 a Bitcoin when Bitcoin was trading at 65, 70K. Absolute trash. Yep, same thing happened with Celsius. I had a friend who got screwed by Celsius. Exact same thing, Dracul. Exact same idea. TEDx, I'm 100% for real. That's why, Sonia, I don't trust exchanges. It was a good learning lesson. I mean, I was mad at the time, of course. Training, thanks for reposting the stream. I saw a lot of you guys repost the stream, by the way. Amazing. Thank you guys, all of you. Sad to hear, but it's okay. Learning lesson. We're beyond it now. But I tell that story to everyone who's ever like, I've got all this money and I keep it on MEXC or Binance or whatever. You might think your money's safe there. It's not. You can use it to trade, put it in hot storage, whatever. But eventually you're going to want to get Bitcoin and put it in cold storage and never look back. Yep. Dracul, same. CPI Sonia, thank you so much for the repost. CPIs. CPI Sonia. I'm bad at names. I'm good with faces and PFPs. Not so great with names, but what are they talking about here? Are they still talking about like what trades you can take?
Crypto quant. You know, on X, when you see all these notifications, all these posts, X amount of Bitcoin has been moved from.
Oh, they're talking about Twitter.
Finance, you know,
they're talking about X. I know all about that.
Crypto quant will show you whether it goes to derivatives or spot. Think about it. If they're moving USDT, more than likely to buy. If they're moving Bitcoin to an exchange, more than likely to sell. So when you have a look at these things over a period of time, and when you come to something like FOMC, you can then say, okay, cool. In terms of options or options expirations, which I cover in my channel, you could then say market participants are increasing volume over the last few days leading up to this, but there's more calls than there are puts. This gives you an edge. And then when it comes to news events, that basically accelerates the price action. You know, that makes sense. So you'll have a level, a value area high, support or resistance. When Trump makes a tweet or something, that basically could take something that usually would take 2 weeks to just play out in something like 1 hour. You know, so that helps. Did I lose you there? For
yeah, no, that helps. But I did not make myself clear. So what I'm talking about, that was phenomenal information. I will be looking into a lot more of that. I guess.
Okay, I don't know what these guys
are talking about is whenever you're on an exchange, and let's say.
Let's go down for a second.
Chain. And you go, okay, I need to place an.
Yeah, that's true. I actually think I skipped through that. Dracul, I think I skipped through that the risk management section. I think I skipped through the ledger part. Okay, we'll have to go back. We can go back and rewatch. We'll bounce around, especially if I'm not stopping to like talk so much, which is good and bad and indifferent. Whatever, we have fun. We'll go back and we'll check it out.
That's what I'm talking about. It's confusing.
Okay, I'll raise my hand again. This guy's cooked here. Sorry, Texas Rick. You look like a really nice gentleman, but we're raising our hand. We're doing it.
What I've always looked for some type of course, not just for myself,
Okay.
but for other individuals that are entering. I get asked this all the time from individuals, and I say, well, I can give you some information on these 3 or 4, but there's others that are very confusing, and a person can actually just really make the wrong order, placing an order on the exchange for a specific whatever commodity.
So
and
Rick,
that's what I'm talking
exchange
about.
are you using?
Oh my gosh, I've got like 5 different ones.
Which one do you use the most?
I actually, the one that I'm using the most is Coinbase.
Coinbase, eh? Okay. So you're basically struggling. You sometimes want to open a long and then you end up taking a short, or you want to go short and you end up taking a long by accident, right?
Or it's
all right, we're gonna do it.
Placing more like a stop lift.
My hand has been raised.
Placing more like a trailing stop. You see what I'm talking about is you see all these different order types, and there's some of them I understand very well, but there's
hey, not gonna lie though, can't he just look this up? Am I wrong? Is that rude? Should I not say that?
It'd be nice if there were some actual good courses out there.
I mean, they're still sitting here talking about how to take a stop loss. Like, I get it. Trust me. I would want to see someone set that up too. But like, can't you just go to YouTube and like Coinbase, set stop loss, click, and then won't there be a million videos? It's like that meme. There's going to be an Indian guy with 30 views, and it's going to be the most goated video you've ever seen. Yeah, just Google it. Google ChatGPT, Google Gemini, YouTube. Yeah, that's this one I'd say go check it out. And you can go to YouTube. Speaking of YouTube chat, I have neglected YouTube a lot. No one's really watching on YouTube, which I think is okay. I don't mind that at all, by the way. But I have neglected them too. All the people who are out there talking.
There will be a box somewhere that talks about SL, and that
who's this guy?
refers to stop loss, and TP, and that refers to take profit. And when you use your risk to reward tool on the trading view and you map out the chart, then you're going to you'll know what
are they talking about? Guys, we have more important things. We got to ask our question.
Into the trade, you can type the value in where the where it says SL, and wherever you want to take profits, you can type that number in where it says TP, and then you have your entry, your stop loss, your take profits, and you then enter the trade. And if you're going short, your stop loss is going to be obviously above your entry, and if you're going long,
just
then
start
your stop loss is going to be below your entry. Does that make sense?
Yes, absolutely. It's
no,
that helps. That helps. I mean, I'll go to the different and try to find as many videos as I can for the website specific to the exchanges. So
awesome. And then come back next week, and if you haven't come right, then come back next week, or if you join the
come back next week and ask your question again.
Tag me there.
We can hear it
again. You're not
again.
coming right, and I'll help you as much as I can.
Okay, hey, I appreciate it. Thank you.
Awesome. All right, guys. Well, I think we're gonna end it off there. We've run out of time, and they need the server for something else. So we will see you all on the next after party. I think we've got 3 or 4 of these sessions together. So for those of you who are taking advantage of the 2-week trial, tag us in the Discord.
We're gonna ask him next time.
We can continue this conversation.
Trenny just keeps reposting the stream. Shout out to Trenny.
And for those of you
guys, we'll do the Rizzo giveaway here in like maybe 8 hours or something. I think I said that.
Much love.
They won't let us. We'll get it. Next stream we'll do it. Go. Oh, they ended it. Dude, they ended it. Did you enjoy the workshop? Yes. Did you learn something valuable? Yes. What would you like us to do more of in the next workshop? Do we want to do something different? No. Submit. Done. Boom. All right, you guys. Hey, Much love. I am going to rug it here. I have nothing else for us today. I'm going to let you guys get back to your Monday. It is a holiday here in the States. Hopefully it is. If it's not a holiday, hopefully you're treating it like a holiday wherever you're at and able to get out there and touch some grass. You guys, I absolutely appreciated each and every one of you guys that joined in. I took some notes earlier on for people who need to have a higher likelihood to win a giveaway here at some point, because they said they have not won just yet. Like I said, I'm going to try my very best. Wait, where did I take those notes? What? Hold on. I want to make sure I have the notes. They're here somewhere for sure. Okay, I'll find them. Don't worry, you guys. Don't fret. I promise you I'll find these things. But I appreciate you guys coming in and supporting always. I am trying as much as I can to keep like a chain of giveaways going so that we always have money to give back to the people. Our next stream will be tomorrow. I think it's going to be at maybe 9 a.m. or 12. I got to look. I got to see what it is Eastern, but I want to make it at a time where everyone can join in and check it out. Probably it'll be like 3 hours from now will be like the most common time, and I'm going to try to keep it consistent, and we'll stream it. If we have nothing to talk about, then whatever, we'll figure something out. We'll watch videos or do whatever. So we'll be streaming daily this week, and we're going to try to keep that going. I'm not sure what the weekend schedule will look like, but we're going to try to keep it going nice and easy. So thank you guys so much. Much love. We're going to keep it going. Give some money away from Rizzo. The Billy giveaway will start today, and hopefully you guys can win some money. Much love, and we're going to rug it here. Thanks, guys.